Hi everyone, thanks for joining in. We're just waiting for a couple of minutes so that people can settle in and wait for the kickstart. I think it'll be started by Viral, who is also on the call.
Hi Abhishek.
Hi Viral, how are you?
Fine. Just give us a minute or two.
Sure. I think we can kick it off at 16:03.
Yes, sure.
We're just waiting for people who might be in other meetings and
Yes.
taking a 1 or
We'll
2
just
minutes.
wait for a few 30 odd seconds and we will start.
Sure.
Yeah. People will join the due course, no issues. We'll just start. Good evening, friends. Myself, Viral Mehta. I look after IIFL product team, and I'm here to introduce you to Abhishek Banerjee. He's a founder and fund manager at Lotus Dew. Has a quite bit of around 12 to 15 years of experience in this fund management piece and has worked in the global companies across. Abhishek, over to you. And he has a honestly, before I hand over the call to Abhishek, let me tell you the fund which he manages, which is nothing but listed venture capital. It has given almost 74% CAGR in last 2.5 years. So we have made a good money as a customer. I hope everybody else will also make money in future. And he will help us through to sell us, understand basics about the budget, about the market in general, volatility. Then we can take about the fund which he manages. And if any friends and any clients who are having any particular query, please feel free to write down your queries in the Q&A box. We'll take all the queries one by one during the end of the session. Abhishek, over to you.
Thank you, Viral, for the kind introduction. Good evening, friends. This is going to be an informal discussion. I'm more very eager to meet all of you. Of course, I'll tell a little bit about Lotus Dew and budget and markets, but we'll talk about why can we generate this kind of CAGR? What is that we do differently than what traditional wealth managers or fund managers tend to do? So where is our edge? Why exactly? I'll try to convince you and explain to you as to why we kind of have an edge or what is that we do differently. So that's kind of the agenda for this call. So first, let's start with as starting off a normal call. Start with the introduction. My name is Abhishek Banerjee. I'm the co-founder and I manage as a principal officer of Lotus Dew Wealth and Investment Advisors. We are a SEBI-registered investment advisory firm, and what we do is we offer our advisory products as a basket of selected equity. Depending on the risk profile of the customer, we try to put it in the portfolio of the investor. So as a background, I basically worked for a sovereign pension fund managing multi-billion-dollar portfolios. I was the named portfolio manager there, and then subsequently worked for Alpha Parity, which is a hedge fund within Franklin Templeton Group, where I did long short across 150 markets. Here in Lotus Dew, what I focus on is construction and portfolio construction and security selection of the stocks that make these baskets, like the listed venture capital. So it's not just me. We have a solid management team. So I'm co-founded by Dr. Prachi Desker. She teaches in Indian School of Business. She's a she did a PhD in in New York Stern and an MBA from IIM Bangalore. On the board, we also have Klaus Nielsen, who was on one of the executive members of Saxo Bank, which is an investment bank in Denmark, and he oversaw a 150-member trading desk there. As an advisor, we have Samisha. He was the ex-CEO of National Commodities and Derivatives Exchange, and he has been a mentor from day one. I mean, he not just governance issues, but understanding how to do business in a regulated environment. That's what he contributes. And we have Rakesh Singhania. He was recently the CFO of Wells Fargo India, and he's joined us as a board of directors. So with that introduction, I just wanted to tell you about what is that we do differently. This is very important because this is where I want explain that what people do and what is the result of that, and what is that we do, why it's dramatically different from what typically is done in the fund management industry. So if you think about in a broad context, right, let's first understand the budget. Let's first understand the markets, and then deep dive into this aspect. So if you think about a normal investment journey of a fund manager, the basic idea there is either you have to know something better than the market or something faster than the market, right? So whatever the market is going to price, either you have better information because of analysis, or you have a faster information because you're able to get that information quicker than others, right? So in these two paradigms, you can fit pretty much every investment strategy. You can put a fundamental strategy where you're fundamentally evangelizing the future value of a company. You can put a quantitative strategy where you're quantitatively measuring it and hence able to react faster. A news analysis, sentiment analysis, reacting faster to news and sentiment. You can, basically divide any kind of strategies into these two main ideas, that either something better or faster. So that's the first thing. The second thing is, once you realize that you're good at one of these two things, maybe both, then you have to establish why is that you think you're going to be better than everybody else in the market around these parameters. And that is the job of strategy design, strategy analysis, and strategy research, which is what we do. We try to convince, have a solid approach as to why we think we have better way of measuring information, or even quicker way of measuring information, right? So asset management or fund management is a industry where we are measuring different things, and the core business of a fund manager is to accurately measure and possibly predict based on that measurement. So we will talk more about the general way we do things in a short while, but given that I just wanted to introduce to you the difference in approach and how things are done. Let's first talk about the landscape here, right? Let's of course one of the watershed moment in landscape setting is budget, where you're required to understand what are the implications of that budget. And frankly, in this time, they're pretty much very little, right? So what does that mean, and what are still the key important things that we should take away from that? So first of all, if you look at how policy making has been happening in India since 2014-15, what you would notice is there's a lot of tweaking and tinkering that keeps on happening around policies, around regulations, around laws. So just take the example of GST. There has been so many revisions in GST. I think people who want to maintain GST invoices, that was difficult. You had to keep on adjusting your GST rate and make sure that you're on the right GST rate, and you're able to predict revenues and cash flows based on these changing environments. But people have rallied around the fact that in fact GST has never been an easy implementation in any country. Singapore, African, basically Indonesia, for example, or other countries in the West. Anywhere there has been a GST implementation, it's always been a tough implementation, that transition. Relatively, I think we are almost there. But just as a case in point, that what we see in this current budget is there has been very little tweaking or changes. They have not changed the tax slabs. They have not given out any freebies, which they have not done anything except they have trimmed a few things at the edges where, the if you listen to the speech, it was all about um, taking care of the inconsistencies that are there. So the message is simple, right? We think we got it. Just there is some momentum in the economy, so just carry on with that. So if you think about the budget speech, the finance minister actually stopped in between to disclose the GST numbers, which turned out to be 1,43,000 crores. The point being that if the way I interpret it is there is a sentiment that the momentum or whatever we are doing that has started to show results. So please continue in the same direction, and we don't want to change anything in the short term. So similarly, that's the key takeaway. I think here, whatever is the modus operandi, whatever things are generally happening around fiscal prudence, that will continue. One of the key points there was, if you look at the divestment numbers, right, which is around 60,000-70,000 crores. The LIC IPO is supposed to come through, and that is supposed to be a 1 lakh crore IPO. So there the numbers don't match. So maybe that is something which will get added. There has been separate allocation towards launching of 200 TV channels, which will provide education to students from class 1 to 12 in their regional languages. There has been allocation made towards that. There have been talks about launch of international universities in Gift City, which will be outside the regulation of Indian regulation, and so on. So there have been many of these approaches or launches around digital media and digital assets, including taxation of digital assets, and of course the most important, the launch of Indian digital rupee. And what does that mean, right? So that is, I think, the most important thing that we should consider out of this budget. The fact that there'll be a central digital rupee, which means slowly, and they will phase out physical rupee and physical rupee circulation. So that just means that whatever was the inflation that you could see in shadow or informal economy where people are getting paid in cash, that will slowly transition towards more formal economy, because there will be no cash to pay. I mean, it has to be a digital transaction. So in that context, I think what will happen and what you would see is a gradual deflation of prices, because every transaction will be tracked, and this will be a long-term trend. So while the bond yields have spiked, and it's important why bond yields have an implication on equity valuation, because that's the discounting factor which is used to discount equity cash flow. So the higher the bond yield, so larger it is, the bigger the denominator is, and therefore for the same cash flows of equity, if you divide it by a larger number, then it becomes smaller. So the valuation reduces as the bond yields rise, if there is no uptick in payments, uptick in earnings outlook. So that's it. The main thing being that we think digital rupee over a long period of time will have a deflationary effect, and whenever there's a deflationary effect, asset prices tend to inflate, right? So because easy money is taken for granted with deflation. So as the bond yields cool off, there could be further rally. That's about the budget, but let's talk about the market. Like, has the market really rallied since the budget? Not really. So what exactly has happened, and what should we kind of expect? Again, these are views and opinions, obviously, and these are, of course, opinions based on certain facts, but nobody can for sure say which is the direction of the market. And what we think is happening is there is a pretty large global macro play here, which is the Ukrainian tension between possible Russian invasion in Ukraine and the standoff with NATO. Why is this important to us? It is important because India is not traded by international investors as a separate country. They're traded as a basket of stocks which are in emerging markets. So China, Brazil, India, South Africa, and so on. So, and in that, India has a fairly large share. So what is happening, more importantly, is that there's a general risk of, in anticipation of the Russian invasion. One of the things, I don't know if you noticed, basically Gift City allowed stocks listed in Moscow to be traded. So there's a new connection being developed in India about trading in Russia. So in case there's a large sanction on Russia, there might be new venues that open up. But as of now, it seems that that's a pretty large headline risk which is getting played out. And as a general risk off from emerging market and a possible not being able to withdraw dollars from the Russian market for international investors if they get cut off from the SWIFT system or dollar system. I think this is just a general sell-off and parking of money. And of course, in this, as the tide is moving out of emerging market, India is also caught in that fray. So I think that is more important. It's less specific than the case of India not doing well. It's just the emerging market risk of is washing out investors out of Indian markets too. But that said, I think if you look at the general trend, and not just in India, in any emerging market in the world, wherever the foreign investors have stepped out, the domestic investors have stepped in. So there have been many researchers who research this and say whether actually domestic investors have superior information than international investors, and is that the reason they're coming in? I just think maybe more than that, it's also the fact that domestic investors invest from their savings mostly, and there's a regularity from that saving. So maybe that is the reason that there is always somebody investing in domestic markets. I think for the first time, domestic investors are a sizable investor compared to the foreign institutional investors who have generally dominated the Indian equity market. So it's interesting, but that's generally the context of the budget and the the market in general. Volatility in equity market is inevitable, but first thing we need to understand is volatility reduces with time. So what investors usually tend to do is they tend to mix volatile asset classes like equity with low volatility asset classes like bonds or fixed deposits. That mix reduces the volatility. That's one way to deal with it. The other way to deal with it is just take a highly volatile asset class and elongate time. And why is that? Why does that work? It just works. It's just the way it is. If you take the standard deviation of daily returns over a 3-year horizon versus a 7-year and a 10-year, that number will be smaller and smaller. So what that means is as you add time to a strategy, the volatility reduces. But as you add time to an asset class, the volatility reduces. If you don't have time, which means you don't have an horizon to wait for that long, then you should go for low volatile asset class or mix it with low volatile asset classes. So one thing you have to be very clear in your head is that, do you really have time? If you have time, you can really go higher up on the risk spectrum and add time to the asset class to reduce the overall volatility out of that asset class. It's just that, as a very simple example, we are born one day and everybody has to die one day, and those are the facts, and in between the heart rate can be higher or lower, right? So it doesn't mean that you need to kind of measure have an opinion on the heart rate at every half an hour. As long as you kind of do something, do a regular check in a couple of years, it's fine. So it's a bit like that. If you focus on very short-term volatility, it might look that it's very kind of unstable. But if you look at a longer-term, vision or idea, it just volatility looks very low. So that is just one event to another, and nothing has happened in between. So that said, what I would do now is I would just pause a bit for Viral to come in to see if there's any question that we should immediately answer, or if I can move on to listed VC and the portfolio construction, or whatever Viral would guide me to. So Viral. Hello, Viral, are you there?
Yes, I'm there.
Yeah, so I just wanted to pause a bit and to see if you have any interim questions that you would like to get answered from the audience, or shall I move on to the listed?
No, you can move on. If our team has any questions, our clients have any question, request all of you to please write your questions in the Q&A box. We'll take the questions at the end. And Abhishek, if you can just speak something in Hindi also, it will help the audience in that line.
That's a good point. नहीं, मैं actually भूल गया था, तो
थोड़ा हिंदी मिक्स करके बात कीजिए सर.
बिल्कुल.
So we can cover the larger audience with better.
हाँ बिल्कुल, ये करेक्ट सही बात है. हाँ, तो बजट और मार्केट के बारे में तो थोड़ा समझ लिया हम लोग. अभी ये सब मैक्रो चीजें जो है इंडिया में अफेक्ट होती है। आई मीन अगर कोई आपको आके बोलेंगे कि भैया इंडिया सेपरेटली काम करता है, बाकी दुनिया में जो भी हो रहा है इंडिया में वो अफेक्ट नहीं होता, ये नहीं हो सकता। ये सारे इंटरलिंक्ड है। तो इसीलिए अभी जो आज का भी वॉलेटिलिटी दिख रहा है, अभी अभी जैसे मैंने बताया कि ये हो सकता है कि अपना यूक्रेन और रशिया के बीच में जो स्टैंड ऑफ है, जैसे यूएस सोच रही है कि रशिया यूक्रेन इन्वेड कर सकती है, तो इस बात पे जो रिस्क ऑफ हो रहा है, इसमें इमर्जिंग मार्केट से पैसे लोग निकाल रहे हैं। रशिया इज पार्ट ऑफ इमर्जिंग मार्केट, तो ऐसा हो रहा है कि मतलब लोगों को लग रहा है कि रशिया माइट बी कट ऑफ फ्रॉम द डॉलर सिस्टम। मतलब डॉलर सेटलमेंट जो होता है बॉन्ड्स का और इक्विटी का, वो रशिया से पैसे निकालना मुश्किल हो जाएगा तो अगर सैंक्शंस लगे। इसी इसी बारे में और इसी रिस्क को लेते हुए शायद लोग पैसा विथड्रॉ कर रहे हैं इमर्जिंग मार्केट्स इन जनरल। तो इसीलिए मुझे लगता है कि जो मार्केट्स में या इंडिया में या रेस्ट ऑफ द मार्केट्स में जो अभी डिप्रेशन आ रहा है उसी उसी के चलते आ रहे हैं। एंड फंडामेंटली और रिस्क ऑफ बेसिस पे मेरे को इतना खास कोई कंसर्न्स नहीं दिख रहे अभी इन द शॉर्ट टर्म। तो दैट सेड आई विल जस्ट मूव ऑन टू द listed venture capital as a whole। एंड इसमें हम लोग क्या करते हैं एग्जैक्टली मतलब व्हाट इज द थिंग दैट वी आर ट्राइंग टू डू। तो इंडिया में ना, इंडिया बहुत मजेदार मार्केट है। इंडिया में ये जो वीसी वगैरह फंड्स वगैरह यूनिकॉर्न ये सब रिसेंट फिनोमिना है। पहले तो लोग नॉर्मल बिजनेस करते थे, मैन्युफैक्चरिंग टेक्सटाइल मैन्युफैक्चरिंग कर लिया, कोई केमिकल का बिजनेस कर लिया, कोई स्टील वगैरह का बिजनेस कर लिया। तो उस टाइम में ना इस सब बिजनेस को तो बैंक लोन्स मिलना बहुत मुश्किल होता था पुराने दिन में, कि बैंक लोन्स जनरली नहीं मिलता था या डिफिकल्ट होता था। तो एक मतलब रिलेटिवली सिंपलर अप्रोच कैपिटल रेजिंग का आईपीओ था कि हम लोग चलो पब्लिक से पैसा ले लेंगे। पब्लिक जो बिलीव करती है कि हम लोग का जो स्ट्रैटेजी है या जो फिर विजन है, उससे हम लोग पब्लिक से पैसा लेंगे। वो एक बैंक से नहीं, हम लोग 10,000 पब्लिक से लेंगे। सो वो वैसा आइडिया लेके बहुत सारे छोटे 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 कंपनीज लिस्ट हुए हैं इंडिया में। इंडिया में करीब 5,000 5,000 लिस्टेड कंपनीज है। सो ये 5,000 कंपनीज, आप मान लीजिए कि इसमें से बड़े भी है छोटे भी है, करीब 3,500-3,000 कंपनीज है हु आर लेस देन 1,000 करोड़ इन मार्केट कैप, 1,000 करोड़ से नीचे मार्केट कैप। तो आप मान लीजिए कि मैं एक फंड मैनेजर हूँ, मैंने एक टीम खड़ी कर दी, उसमें 5 एनालिस्ट है। तो 5 एनालिस्ट क्या करते हैं, वो हर हर वीक में 5 दिन काम करता है वो, और हर वीक में 2 कंपनीज वो एनालाइज करता है डीप डाइव करके कि मैं ये कंपनी है, इसका ये फिनेंशियल्स है। तो अगर मैंने एक एनालिस्ट को 500 कंपनी दे दिया एनालाइज करने में, तो 2 कंपनी पर वीक, वो तो एक साल 500 कंपनी में निकल जाएगा। तो जब तक उसने सारा कंपनी एनालाइज किया, वो दूसरा साल आ गया, फिर से उसको स्टार्ट करना पड़ेगा। सो दिस इज काइंड ऑफ इन व्हाट वी कॉल इंट्रैक्टेबल प्रॉब्लम, कि ये प्रॉब्लम का कोई मैनुअल सोल्यूशन है ही नहीं, कि इतना सारा कंपनीज है, इतने सारे अपॉर्चुनिटीज है। आप कोई मतलब बाई चांस आपको पता लग गया कि यह कंपनी अच्छा है, या कोई और मतलब सोर्स ऑफ इंफॉर्मेशन से आपको कंपनी नजर में आ गया, तो आपने एनालाइज किया, एक डाल दिया, तो दैट इज वन थिंग। ये सारे यूनिवर्स कंपनीज के कोई सेल्स रिसर्च भी नहीं होता है, ज्यादा लोग फॉलो भी नहीं करते। तो हाउ डू यू काइंड ऑफ फाइंड अपॉर्चुनिटीज इन दिस? सो दैट इज द मेन प्रॉब्लम। कि प्रॉब्लम इज दैट म्यूचुअल फंड्स, नॉर्मल पीएमएस, फंडामेंटल टाइप्स जो होते हैं, अब इसमें टेक्निकल एनालिसिस भी नहीं हो सकता, बिकॉज जो प्राइस हिस्ट्री, वॉल्यूम हिस्ट्री तो उतना है ही नहीं। मतलब इट्स नॉट लाइक सबसे वेरी हाई वॉल्यूम एंड वेरी फ्रीक्वेंटली ट्रेडेड क्वांटिटी है। छोटे छोटे कंपनीज है, क्वांटिटिव भी नहीं कर सकते। बैलेंस शीट का जो रेशियोज है, यू डोंट नो व्हाट डेटा टू ट्रस्ट, व्हाट डेटा नॉट टू ट्रस्ट। डेटा प्रोवाइडर्स के पास वो डेटा भी नहीं है। मतलब इफ यू लुक एट अ ब्लूमबर्ग स्क्रीन, और इफ यू लुक एट नॉर्मल डेटा प्रोवाइडर जैसे हम लोग यूज करते हैं रेफिनेटिव, विच इज प्रोफेशनल डेटा प्रोवाइडर फॉर asset classes, many of those companies will not have complete data. So so इसके लिए what happens is mutual funds, PMSs, AIF, they tend to ignore this universe, कि we just cannot मतलब fundamentally we cannot systematically look at this universe. But हम लोग, so we have a different approach. We said कि ठीक है, these are small companies, so what can we trust about this? And obviously the answer is we can trust people, because people have reputation, they have a social face. So but how do we know which people to trust, right? So what we have done in the listed venture capital is we wanted to give a venture capital like payoff to retail investors who venture. You can be a venture capitalist, right? If you have 1 crore plus, you can contribute to an AIF, which is a venture capital fund, and you can take venture capital exposure. But what about people who have less than 1 crore and they still want a venture capital like payoff? उन लोग के लिए क्या? And how do you protect those minority investors who want to invest in these smaller companies and then also give them that kind of possibility that it might work out as a venture capital fund. So what we do is we basically collect our own data about board of directors of all listed companies, and then we try to connect that those set of people to their backgrounds. Which other private companies they're connected to, which other public companies they are directors of, what is their CV, where did they go to study, where did they kind of which other companies did they work for when they went to study, who were their peers, are there such peers who are in other listed companies who are kind of connected somehow. So we are trying to establish this whole connection pattern, and how are things really connected. I will just just let me, I'll show you a screen now. It's on our website, uh, and the reason I'm showing you this is that we have actually made this data available for anybody to come and research, and I'll show you where you can access this data and what kind of analysis you can run from it. So what we have done is we have taken this director's data and connected it to the actual holding of how people are connected and how people are connected across companies. So let me just come back to this slide for a bit. So that's the first step. We are looking at how uh, directors of listed companies are also connected and what's the quality of the CV. So then we take the whole board composition and we calculate a composite score using what we call artificial intelligence and machine learning in terms of which other industries and entities they are connected to, and use that as a screening mechanism, right? So right from this huge volume of 3,000 companies, we have brought it now down to about manageable 200 companies, right? And from there we then apply all the principles of fundamental analysis like quality of earnings, sales growth, margins. We look at tax litigation, consistency of tax payments, because people who tend to window dress earnings, they might have inconsistent tax kind of tax payment history. What kind of tax litigations? We look at the tax litigation from the annual reports and what is that they're litigating about. So these are some of the quality things which we do using natural language processing of the tax litigation and so on. So that's why our approach is very different, right? So we are not constrained by the traditional time constraints a fundamental analyst will have. Neither. So we have our own data, we have our own algorithms and technology that process this data, and that is the first step that gets applied as a fintech play, and then we go ahead and figure out the normal fundamentals. So that is the reason we are able to offer these kind of high quality strategies that we think is very high quality in terms of the fundamental research that goes behind it, but at a very affordable price and at a fixed price compared to what you would typically do in a PMS or an AIF where you have a performance fee or a sort of a markup on the fee. So I think of course the basket is as small as the stocks are required to match the index weights of direct indexing around the stock weights. Fake as well, and therefore you can make the fee customer. We say of your total equity allocation. So the general question is, how much should I invest? So the first thing is that, if you have 100 rupees in equity across mutual funds and direct equity, 20 rupees should go into this kind of a strategy if you have the highest risk tolerance, right? If you do not have high risk tolerance, if you have low, then that number is 5%. If moderate, it's 10%.
Sorry for the inconvenience, guys. Just a minute. Viral, can you just check with her, sir?
Yeah, I'm checking. I'm checking. Yeah, Abhishek sir is just connecting. He got dropped off by some due to some network issue. He's just connecting back in a second. You will make sure he speaks little louder. Please hold for a moment, please. Abhishek, can we speak little louder, please? You are on mute. You are on mute.
Is this better, Viral?
Yeah, better.
Okay. I'm just going to share my screen again. Sorry everyone, I dropped off for a bit, but what I wanted to say was that because we are really banking on the reputation of people, and we have developed technology where we are actually measuring the reputation of people by looking at their backgrounds using normal AI techniques like natural language processing, entity recognition, and so on, which is common available technology in artificial intelligence to identify these kind of people and then figure out how they are connected. So I wanted to show you one screen here. So this is our website, lotusdew.in. What I wanted to show you was a particular page here. It's called Explore. So if you go to the Explore site, we can look at something like I think there's still some connection issue. I will try to come back to it in a bit. But going back to the presentation, we are if you go to the explore page, you can actually see the data that we are talking about. So there we show you how entities and people are connected. But the main point being that our endeavor is to find non-balance sheet adjacent indicators for investments in listed companies as a core business. So as a very key differentiator, what people call USP, we are constantly looking for that kind of data and that kind of information which is adjacent or non-balance sheet in nature, which can provide us a lead into a better insight about that company. So this could be something like how institutional investors are investing in these companies, large trades by institutional investors. It could be something like the board of directors. It could be something like around option based data as to what these for companies that are that have a FNO, what's the sense around it. But in the case of the listed venture capital micro cap companies, there's no option data, there's no futures data, there's nothing. It's just the company and it's operating in a niche. So that's really we find it's a kind of a very different approach. And what we have seen is in the past, this strategy has done extremely well as a historical returns generator. Uh, there has been new discoveries, or basically we have discovered companies that are not that popular, and we constantly keep researching. The listed venture capital has about 10 stocks. We have a bench of about 20-25 stocks, and the basket is rebalanced discretionarily on any given day when we find that there's an opportunity to rebalance that portfolio to a new one, right? So that's what we are doing for individual clients there. So that said, that's the core result. So let's look at the result. What I would like to point out is not the excess return. This is fine. I mean, we have done better than the index, but what is more important is that we have done better than in every time frame, right? So be it 1 month, be it 3 months, 6 month, 1 year, 2 year, since inception. And this is as a historical result, this is I'm proud of this result, because the consistency is very important in terms of offering returns, and I hope that we continue to deliver such consistent returns. But that has been the history, and this is something which, as a fund manager, technically we find very pleasing. So the fact that it's not just one period where we have really shown tremendous results, and after that there is no excess return, and basically the historical returns look great because there was one period when it did well, but future investors did not get the benefit of that, right? So in this kind of return pattern, that's not the case here. When the returns are consistent, there is promise that future investors will also get benefited if the return pattern continues like this. So with this, I think I'll just take all the questions that have been accumulated. So Viral, please can you tell me which question should I answer?
Sure. We'll take all the questions which are coming up one by one. Prior to that, let me also share one screen. 1 second.
I'll add share my screen.
I'll just. One second, please. Is my screen visible?
Yes, it is visible.
Yeah. Before I take this, I just take an opportunity to also showcase. We have a clickable PDF where we can share it on later to all our participants, where we can just show you how to subscribe a small case or how to subscribe a listed capital venture. I have already mentioned about Abhishek. Everybody knows now in detail. And this is a listed capital venture briefs. What Abhishek has already explained. I think we have not covered the subscription fees. It is just 999 on monthly basis. The amount could be anything. And this is the page through which we can see from where we can purchase the listed venture capital portfolio. This is nothing but the entry page of the small case. We have a URL smallcases.indiainfoline.com. You can just go through that URL. You can see there are a couple of portfolios. Here we have entire portfolio of Abhishek's and how it has performed. Prior to 2000, you can see that is the back-tested result. And this is the actual performance, how it has been performed in 2020, 21 and 21, 22 till date. So your minimum investment is only 31,000. So you can start with your minimum investment, which is 31,000. The price which would be debited is 999 for a monthly basis. Amount could be, or corpus could be anything. It could be few lakhs, it could be few crores. That is not an issue. The price remains the same. There is no increase in price then after also. In case anybody has any query later stage about how to purchase, or you find it difficult to how to purchase, please feel free to get in touch with us, or you can get in touch with your relationship manager. They will guide you how to purchase the listed venture capital portfolio. Coming back to the question and answers.
So Viral, I actually have a few of the questions in the chat board. I'm just going to go ahead and read them out, and try to answer them.
Yeah, please.
So Mr. Sagar Dev is asking, do you think the Facebook crash had a role in the recent market downturn? So yes, I think what is happening, that's a great question. What is happening is that in US, as the interest rates are going up because of inflation, inflation in US last print was 7.1%. The bond yields are rising, and because of the bond yields, tech stocks are the first to take the first hit because they are more growth stocks than value stocks, and value tends to do better in a inflationary environment because there's latent value stored within the company. But my personal opinion is that the inflation is transient. There's basically two camps of thought. There are some experts, market experts, who firmly believe that inflation is sticky and it's going to cause a continuous change in bond yields. I personally don't think so. I think this is a transient inflation because of supply chain issues where China is not able to produce as much, or the shipping has not been as frequent as possible because of issues with shipping, and the fact that we are talking a lot about alternative energy and we have shut down traditional energy manufacturing, but we have not really scaled up alternative and renewables. So the prices of energy, energy commodities like natural gas, coal, and oil, they're rising because there's demand, and the supply. For example, if you look at recent news, France basically decided and to shut down most of the nuclear reactors. So did Germany. So uh, on one hand, we are shutting down older traditional energy manufacturing, but we are not replenishing it quickly enough with new sources of alternative energy. And a mix of all of this is showing up as a transient inflation number, in my opinion. But again, inflation is more of a behavioral thing. Once it starts to pick up, it gets its own life and momentum. So we'll have to see. But I think the bond yield should cool off, and that will basically, inflate the tech stocks again. Facebook, I think it's more of a fundamental issue than what I talked about. So maybe this is 20% of the issue, but if the Facebook for the first time ever has reported a decrease in active users, right? So it's the first time like people think that they have gone past their peak. We don't know. I think it could be a temporary blip. Facebook, Mark Zuckerberg is an excellent entrepreneur. He has always been able to steer his company towards the next growth. So if you remember, he took over WhatsApp for $18 billion, and now nobody uses email, right? So every communication happens on WhatsApp, and email is just for notification. So Google lost out a bit over there. He took over Instagram. We have so many products that like Facebook, Instagram, WhatsApp, which we interface, and it's not directly Facebook, but they have always been successful in finding that company that people tend to use a lot and make that a part of Facebook. So we'll have to see. That said, I don't think it's one company which decides the market, though it's a very large company, but there are a plethora of other factors. So next is a question by an anonymous attendee. He's saying that based on your small case three categories, it's always preferable to have, let me just try to read this one. Based on your small case three categories, is it always preferable to have companies at least 500 crore plus in next 5 years? Which small case is preferred? So we have three small cases on our, if you go to lotusdew.smallcase.com, here we are talking about, smallcase.indiainfoline.com, where we are specifically talking about, the listed venture capital small case. Listed venture capital small case is roughly about companies around 1,000 crores of market cap. So if you you need that kind of market cap at least to have some liquidity around those shares. So we of course look for liquidity parameters and liquidity screening as to what kind of average traded volume are there. If people step in and out, will there be a lot of slippage or impact cost? And the beauty about these kind of strategies is that also in this format of a small case where individual investors can go and trade their own baskets, that also diversifies the liquidity need and demand not being at the same time. So those things help to make sure that there's orderly market exposure given to investors who are investing in these stocks. That said, I think the first rule of equity is that I know you have to be long term, right? As I explained, that volatility reduces with time, unless you have 5 years and plus. If you invest in equity with less than 5 years, it's just you're betting on luck that if you're lucky that you might get a good return. But there's nothing, no fund manager or no advisor can tell you that you can invest in equity for the short term. The only true answer is that if you do that and you make a good return, you've just been lucky. So there's always various ways to play on luck. I think the other problem with luck is that when you're trying to depend on luck, you will only invest money that you're prepared to lose, and that is a very important mindset change where you have to have faith in the market that it's a compounding machine that works for you. So instead of investing money that you're prepared to lose, you should invest systematically and invest the money that you're prepared to save. So that is again important, and that has to be over 5 years. You're going very good. Please continue in English. Okay, so thank you. I mean, I'll also हिंदी में भी बोलूँगा क्योंकि यहाँ पे ऑडियंस है और मुझे अच्छा भी लगता है हिंदी में बात करना, तो कभी कभी दोनों लैंग्वेज में बोलेंगे. हाँ, तो मिस्टर सागर देव इज विच डेटा प्रोवाइडर. तो डेफिनेटिव नाम है. डेफिनेटिव इज इट वाज कॉल्ड थॉमसन रॉयटर्स बिफोर. तो उसका सब्सक्रिप्शन लिया हुआ है, तो इट्स अ प्रीटी एक्सपेंसिव सब्सक्रिप्शन. लेकिन वही टू गिव यू द बेस्ट क्वालिटी एडवाइस वी नीड द बेस्ट क्वालिटी डेटा, तो उसमें तो कोई कॉम्प्रोमाइज हो ही नहीं सकता. Is there any of your small case impacted by FI investment in and out? तो नहीं है, मतलब ये तो इतने छोटे कंपनीज है ना, तो एफआईआई के रडार में ही नहीं आता है. तो अभी डोमेस्टिक इन्वेस्टर्स के रडार में तो एफआईआई के तो और भी नहीं आएगा. तो ये सारे एकदम छोटे छोटे कंपनीज है. अभी एफआईआई आए जाए, इन लोगों को खास कुछ फर्क पड़ता नहीं है, क्योंकि इसका मतलब इंस्टीट्यूशनल इन्वेस्टर्स, स्पेशली फॉरेन इंस्टीट्यूशनल, इतने छोटे कंपनीज इनमें नहीं जनरली इन्वेस्ट करते. तो इसमें डोमेस्टिक इन्वेस्टर्स का इंटरेस्ट है, छोटे छोटे इन्वेस्टर्स है, छोटे रीजनल जैसे फंड्स हो गए, मतलब एआईएफ्स हो गए, या फिर ब्रोकर्स हो गए, जिसको जो जानता है शायद प्रमोटर को कि पता है ये अच्छी कंपनी है, तो जाके अपने ब्रोकरेज में एडवाइस में वो डिस्ट्रीब्यूट कर दिया. ऐसे होता है, लेकिन एफआईएस तक तो ये शायद पहुंचते ही नहीं है, स्पेशली फॉर द लिस्टेड वेंचर कैपिटल. ईयर वाइज परफॉर्मेंस मैं so Mr. S. Roy or Miss S. Roy is saying that please show your year-wise performance. All the performance data is available on the small case microsite. You can download the data and you can analyze it in whichever ways you would like to. I would encourage you to do that. So please see how this information evolved. I'm particularly interested on how you have performed when the benchmark was negative. It's a good question. Generally, what we have seen is when the benchmark is negative, we tend to go also in the same direction. Initially, we underperform the benchmark, and towards the turning point, we tend to go settle down before the benchmark hits the minimum. So that has been the past so far. Is it more or less than the benchmark? So yeah, I mean, obviously you have to perform in all market conditions to kind of go for this kind of return. So somebody has asked, like, can you explain the margin and earnings variability feature in detail? So basically, we look at operating margin of various business lines and various companies as a variability, right? So how consistent. So you're basically looking for consistency in whatever are the reported earnings and reported numbers, because it's very difficult to be consistent. So if somebody is being consistent in any kind of sort of reported numbers, it's very hard to window dress that. So we kind of look for that as a indicator of quality. So the back-tested returns were calculated using the model portfolio in the past and taking the prices. That's normally how back-tested returns are calculated. So I'm just going to another question is, so how can you explain how you use machine learning? So yeah, I think the most important use really is we kind of look at a lot of unstructured data where there is no structure. It's not like there's no structure in that data. So to make sense out of data, we have to apply machine learning techniques, right? So we have to look at structuring the data from unstructured data to structured data. That is really the core of what machine learning is used to organize unstructured data into structured information. So that's the thing. And let me see. Sector allocations in your small case. Yeah, it's a great question. So we do not take sector bets, right? So what we have done is we basically map these companies from a subsector to a broad economic sector. So we tend to have a company or a couple of companies that represent a big sector like industrials or financials or consumer across the portfolio. So there's no one sector which is dominating, and there's no residual sector bet compared to the index. What if somebody wants to pay the fee of 99 and gets out of the investment for long term on his own? Yes, I mean, see, again, it's basically asking the question, can I visit the doctor for a consultation and take the prescription and keep on eating the medicine without going back, right? So of course you can do that. But is that the best thing for you, right? So it's just a bit like that. We issue rebalances, we issue kind of changes, we send the research as newsletters every couple of months. So if you stay invested and you stay subscribed, obviously you'll receive those changes in the portfolio and any subsequent newsletters that we will share. The main problem is that these are really small companies, and typically they tend to get taken out by M&As, or they sometimes get delisted because the promoter wants to take them private, and so on. So if you're not really on top of these companies all the time, I mean, you can get caught in those situations. We try to look out for those situations for you. Hence, if you purchase a subscription, the benefit to you is that there's somebody else looking over those portfolios for you. There is somebody else who is also kind of sending you research notes. आपको research notes मिलेंगे, emails में आएंगे, आपको पता लगेगा कि rationale क्या है companies जो है इसमें क्यों invested है, and so on. So आपको benefit यही मिलेगा कि आपका portfolio कोई ध्यान में रख के उसको research कर रहा है, और आपको न्यूज़लेटर इंफॉर्मेशन और रिसर्च आते रहता है कंपनीज के बारे में कि कंपनी में हुआ क्या है ना, तो मतलब वो ओवरव्यू और सुपरविजन रहता है. But I think these are the questions, Viral. I think unless you have any questions for me, which probably is not answered.
We have answered almost all the questions. So just a couple of questions on the chat box. Any lock-in period for the small case? Technically, there is no lock-in period. Any client can exit anytime.
Correct. I think the lock-in is आपको अगर results मिलेंगे आप खुद ही नहीं छोड़ के जाएंगे ना, lock-in करके आपको force करके कोई फायदा नहीं है. तो
compulsory there is no lock-in period, honestly. But if you want to be invested in any listed venture fund to that extent, where the dynamics are such that you should get invested at least for period to 2 to 3 years or 4 years to that extent, only then you will be able
I would say 5 years, but that's again as
at
I
least
said,
2 to 5 years to that extent, nothing below that. How frequency the portfolio is shuffled?
So it's basically as I explained, right? इसमें 10 stocks है, there are 10 stocks, और हम लोग we have a bench of 20-25 stocks. Technically it can rebalance any day. I mean कभी भी rebalance हो सकता है, and हम लोग ये depending on the particular situation हम लोग rebalance करते हैं. So there's no guidance, upfront guidance की ये weekly है, कोई mechanical strategy नहीं है, कोई मतलब ऐसा नहीं है कि rule based नहीं है कि every week we'll do something, but ये discretionary rebalance होता रहता है.
Okay.
So I will not name the stocks, but I can name one or one stock because ये तो बनता है. I think one of the examples that I often give is one of the stocks that we invested in is CDSL, right? When it was a tiny company, and we have held on to that company ever since. If you look at the board of the CDSL, right, it's incredibly talented board, and they have recently had some management changes. So the reason it came to our screen was when we were evaluating the composite board score. It kind of screened up on the top, and then we realized that, well, CDSL is basically a duopoly, right? There's NSDL and CDSL, and NSDL is not listed and CDSL is listed. Funnily, every time you sell a stock, CDSL makes money. So if people are bearish, CDSL actually makes more money because they're getting out of those investments. So I kind of thought about this as a storyline, and the people who are taking care of this particular idea, and then decided to further research, and we looked at all the quality and fundamental factors. So we have continued to hold that stock. It's still in the listed venture capital portfolio as one of the examples, and they have digitalization or dematerialization of financial data. It could be they are working on dematerializing records of real estate sales, right? So your sales deed could be dematerialized. Your education certificates could be dematerialized. So there is a path where they can have more and more, products because they have the infrastructure where your KYC and your, educational certificates and your land and real estate records are all connected. And for every transaction or every query, think about every encumbrance, they would make some money. So they are building a platform, right? As important and as crucial as any other platform. So we are still bullish on that kind of story.
Thanks, Abhishek. We have almost done each and every question.
Right.
So thanks for your time, your wonderful time. I hope our audience have made good insight about the market, about the listed venture capital as a fund. Currently, this fund is available on the small case platform. Please get in touch with your respective relationship managers so that they can help you to purchase, how to purchase this. It is one of the simplest way to purchase.
Well,
and
thanks
thank
a
you
lot.
all
Thanks
for your time. Yeah.
Thank you for attending. Thank you.
Thank you all.